Hey there, we're going to look at two trades using the Black Diamond Trader, and it's actually from an email that I got from a customer who had purchased Black Diamond Trader through my link. And let me just bring up their email here. Well, first off here, what they said is they had over 200 pips trading two currency pairs. That's actually quite impressive, especially where the markets are right now. So here's the email. Hi, Black Diamond. I bought the system, and after finding out how I am comfortable trading it, I want to present two trades that I am proud of. The BPUSD. That's the British pound. That's what they wrote. I missed the big move, but traded from 133.25 to 134.20 using what you call structure as a target and getting out when price turn. And EJ, which is the euro against the Japanese yen. Thank you for the pattern. And when the short set up, I took it 115.20 to 113.90. Thank you for the video. So let's just take a look at what they are speaking of. This is the big move in the British pound that they said they had missed. And the reason they missed it, now, in hindsight, this is a great trade. We don't know it that this is going to happen at this time. What happens is down here is our trend strength indicator was below the blue line, which means there's not much of a trend going on here. And if you think about it, this is actually was in a trading range. Let's just pop up the daily chart so you can take a look what we were looking at. You can see we're in this trading range right here. And even if you look down on the daily chart, trend strength indicator, it's pretty low as well. Well, it's a choppy market, right? This is what's to be expected. And keep note of this line right here, because this is a structure they talked about. And I talk about that in my intro video. Great targets. Let's bring back to our 4-hour chart. And this is the trade they got in on here. Now, the system itself tells you to use limit orders. A limit order would go below current price. So when this bar here closed, this blue dot printed, and then this candle forms. A limit order would have been set at that blue line, but price never really hit it. And that's the problem. I always say use stop orders, which go above current price in the long, in the case of a long, and that way the momentum, at least the short-term strength, is taking you into the market. So this is the trade they got in at. They came over to here. And the close they set at was at 34.20. Well, 34.20 is actually in this area here. So they pretty much got out at the close of this candle here, or someplace in this candle here. So what happened was they saw price rocket up to structure, which I talk about. When the price couldn't make any headways, they got out of the trade, which is actually not a bad little play. Instead of just using these as your target, they monitored the trade. So I guess they have time to do it. And once again, you have a long setup here. And if you use limit orders, you would have got taken in this trade. And you'd still be in it because your stop would be down here. But it's not looking very good. Using stop orders, it would have been above. You would never got into this trade. And this person here didn't tell me what they used for a stop. But they probably would have used these lines down here. So this is actually a really good trade. Let's bring up the other market that they mentioned, the Euro Japanese yen. This is the pattern I spoke of. You can just see that the range that we have here. It's a consolidation move. That's what we have going on right now. You can see we are painting in these higher lows, putting in lower highs. This is a problem, all right? This is we get the congestion of the market, but usually out of these moves come really good moves. And right now we've got a long trade printing right here on the daily chart, and you would not get into this trade until this candle closed and you put your stop above that candle if you're trading that. Okay, but this is the 4-hour chart. This is the chart they used. You can see right here, price came up, price rocketed down. This is a long entry here, right? Problem is, if you would have put this trade in, you would have got in that market, got a little bit of juice, and then you got taken out. The good thing is this red dot here, the big red dot talks about a trend change. We're trading to short. This is the trade that they got in at. They sell stop below this candle right here, and their target was down here because you can see the targets are laid out for you. These are actually really good trades. You can see this is just, if you just use normal price patterns, right? This is a bear flag on this move here. Problem with this trade, even though it does work out, is if you look straight down here, our trend strength indicator is weak when this trade sets up, and on this yellow dot would have told you to get out. So they ignored that. The only reason I can think they ignored it was they saw down here, they saw an increase in our trend strength indicator, which again, if that's what they did, that's actually a good play. And we have another short set up on this candle right here. And if you're taking this trade, you're going to wait until this candle closes and then place your sell stop underneath. Your first target is here. But if you look over here, right now, our stop would be way up here, right? Because this Black Diamond Trader uses dynamic structures, right? So this, your stop is up here, and eventually this stop would come down to here. But this trade's setting up right now. So that's just quickly what I want to cover. This email that I got sent. Once again, you can see it here. It's actually pretty painless, these two trades. And that's it. If you want to pick it up, there's a link below here. Just click it, and we'll see you on board.